All right, so inflation is the key topic here this week and certainly driving market direction here since the Fed conversation a couple weeks back. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, hopefully weed out some of the noise along the way. And this week is definitely data heavy. So we're going to spend quite a bit of time on basically inflation data, talk a little about jobs as well. And then kind of tie that into how that's translated to market movement, as well as what to expect from the Fed here coming up in Jackson Hole next week. So let's kind of back up a little bit. Again, let's really focus on inflation to start. So Tuesday, we had producer price index numbers come out, or PPI for short. And PPI was up 0.1% on the headline number versus expectations of about 0.2%. And markets seem to really like this. I think that I'll come back to this, but it seems like markets are certainly hoping for perfection. And again, I'll spend a little bit more time on that here in a minute. But obviously, when the market is seeing inflation data come down, what they're really suggesting is number one, inflation is coming down, which is good. But number two, they think that that ultimately may mean that the Fed does cut. And so, here we see that in the producer price index number on Tuesday. However, what I do want to highlight is that core PPI, core producer price index, was up 0.3%, which was actually more than expected. So a little bit of conflicting data there. However, fast forward to just yesterday on Wednesday, and we had CPI data come out, so consumer price index, and that CPI number was up 0.2%. The core number, which again takes out food and energy, was up 0.2% as well. Both were right in line with expectations, so this didn't really change sentiment, I guess, or take anybody by surprise. But the core number, just to be clear, this 0.2% core number does bring down the year over year inflation data point down slightly. And so I think that, yet again, we saw markets kind of enjoy this. And so we've kind of seen a bit of a run up again since the pullback that we saw after the Fed press conference a couple weeks back there. And then fast forward to today, and I want to highlight maybe a little bit more around the consumer. So today we really got a lot of data around that general theme. One of them being retail sales. So retail sales were up 1%, which is good to see, definitely higher than expectations. And in a world where we're certainly a bit concerned about the consumer, I think that this is part of why we're seeing the market up a bit more here today on Thursday. And then jobless claims were down again a bit as well. So the prior week, jobless claims were up quite a bit. The number's still a bit higher than it had been, but either way, down a bit from the previous week and a little bit below expectations coming into this week's number as well. So again, I had mentioned earlier that I think the market is really looking for perfection here. And I think that, I'll expand on that a little bit more, but this seems to be kind of the theme here in 2024, to be honest. I think that what this means is that the market is really looking for a scenario, this Goldilocks scenario, really, where the Fed cuts rates, inflation comes down, and neither the economy or jobs are affected really at all. And maybe we run into that, but history, has told us time and time again that that is not very typical. It doesn't mean it can't happen, but it certainly is a tough road ahead. And so we'll see what happens, but I think that really that's what we're seeing again this week is this idea that the Fed is going to kind of create this soft landing is what they call it, where really we have all of these scenarios work out all for the better, and there's no kind of lasting damage from some of this rate change and policy, shifting over the past couple of years. So coming up, be sure to tune in next week because we do get the Fed minutes next week, and then on Friday, I believe it is, the Fed Chair Powell will be talking at Jackson Hole as well. And obviously, this feels like it's almost by design at this point, and I don't mean to continue to talk about the Fed every single week, but the reality is this is what is driving the markets by a long shot. And so I wanted to touch on for a question of the week, what to expect from the Fed next Friday at Jackson Hole. So what I will share is from what we've seen so far, last Fed press conference, Fed Chair Powell had kind of suggested, that he doesn't, he kind of expects that they will be cutting rates in September. He didn't say that directly, but that was kind of the general message that we got out of the press conference there. So as far as looking forward into the Jackson Hole conversation, I would suggest that that tone does not change, right? What we have seen since now, the week of the press conference, we got some data suggesting jobs might be having a tough go. And obviously that's where we saw some of this pullback happen a few weeks back there. But since then, we've basically got inflation showing that it's coming down. There are definitely still some signs in terms of cracks for the consumer and the labor market. And although we did get this, this little bit better jobless claims number here this week and a little bit better retail sales number, I think that the Fed is paying attention to that and may cut as a result of that if they see changes. But I think that ultimately, if those are still strong, I don't think that's going to hold them back from cutting rates. So in general, I think the message is going to be the same. He's not going to say for sure whether they're cutting or not in September, as you might imagine. But I think the message is going to be very similar to the press conference and just kind of teeing up this idea that they likely may cut when the September Fed meeting comes about. So hopefully that's helpful. Obviously, a lot of data here this week, and markets are certainly liking what they're seeing so far. Will this hold? Will we get back to where we were prior to the Fed press conference? We will have to wait and see. But be sure to tune in next week because we will be touching on the Fed minutes, and then I'm kind of gearing up for the Fed, the Fed conversation at Jackson Hole there next Friday as well. In the meantime, have a great weekend, and we'll see you next Thursday at 3.